Good morning, ladies and gentlemen. How do you do? I'm your host, Seth Julian. Welcome you to today's briefing. We're looking at the world's largest enterprise resource management software corporation, Microsoft. They're reporting out their dividends at the close of the market today. Since November of 2021, they have lost on the order of, I'll tell you exactly, 30% of their market value. They're laying off 10,000 workers as of last week's announcement. And you can see the stock price is down. And let's take a look at the financials. On a quarterly basis, we see that the profit margin has been falling. That's a crucial indicator. While revenues have stayed fairly steady, net income has fallen. That's an important indicator of financial health. As well, I want to now just look at the annual numbers. You can see that while revenue is growing annually from 2018, net income has not. So net income is growing slower than revenue. That means costs are bloated. That means that they're going to have to, and they are leaning down. They're cutting back. They're leaning down. They're cutting their workforce, and that's traditional. Here's the debt to asset ratio. That's been paid down, but what I want to point out is while the cash flow is from operations is doing very nicely, investing in financing is not. So this is a drag on the cash flow generated by corporate activity. And we drill down into the statements, the financial statements. We can see that, the statistics, my mistake. We can see that the ratios are changing and that their returns are declining. And that's those are important statistics to understand. If we take a look at the dividends as well, the dividends have been falling, and the dividend yield has also been falling. So this company is clearly in a unhealthy circumstance, and it's going to have to right the ship in order to get back into the market's favor. So we're going to see that hopefully today with announcements of what they're up to. They announced the job cuts. That's going to be serious. They also announced yesterday, at the close of business, a $10 billion investment in OpenAI. These folks are the manufacturers of ChatGPT, if you haven't heard of this. And if you haven't heard of this, you must be living under some kind of stone. This is taking over the world as a potential replacement for search engines as we know them. So Google is this is on top of a $1 billion investment they made in this outfit about a year ago. So they're doubling down their position by an order of magnitude, and that is a significant indicator of where the future may lie. But the present lies with a decline for tech stocks. This is a bellwether. We're going to see this throughout the earnings report season and the annual earnings season. Remember, Q4 is the close of the fiscal year, so Q4's results are the fiscal year's results, and they're way more significant than any other quarterly earning report. So that's what we're looking at today, ladies and gentlemen. A decline in Microsoft, a cutback, a readjustment, switching of the gears, trying to get back into a healthier operating situation, and we'll watch very carefully to close the market today what the market reaction is to that earnings report. That's going to do it for today, ladies and gentlemen. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence.